Hey my fellow swing traders, if you ever felt frustrated that you do not know which hot sector to play next or where the market is actually rotating their funds to on a week-to-week basis, then stick around. I might have something for you. Welcome to the weekly stock market analysis, where I use my experience and price movement to analyze which are the growing sectors that has potential for a swing and which does not. And why is it important to you? Okay, because as swing traders itself, we are very focused on the small aspect, okay, where we are always looking at individual stocks, right, that have a forward moving momentum. There's a good price movement to fall back and buy in at a certain area, but these are very, very small and micro area. But sometimes the overall macro economic factors, right, or the overall markets have a very, very huge impact on our swing trading itself. Okay, and I've mentioned this many times in my old videos, okay, to my old subscribers. Okay, back when the days, right, when it was out of 5 days, 4 were green. Okay, it was green almost every day. Okay, those were the times where you do not really have to do so much analysis. Okay, roughly most of the sectors will be going up. So people are picking a lot of individual stocks. But right now, okay, as the entire market right now is in a choppy market by definition, okay, a lot of people are getting shaken out by these kind of sector rotations. And now these kind of big market analysis are actually very, very essential. And a lot of the big fund managers, okay, financial advisors, they all always do this as well. So that's what this show is all about. Okay, and if you enjoy this kind of content, right, you really like what I'm going to say to you guys and my effort in producing this new series, right, where I try to do this every single week for all of you, okay, so that you can have a better understanding of a bigger picture, then smash the thumbs up button, okay, subscribe to this channel for tutorials, okay, my weekly top 3 swing trade stocks video, as well as my weekly stock market analysis, okay. Hope you guys enjoyed this, okay, and let's get straight into the video. So first, okay, let's look at the major markets, okay, for last week. Okay, so right now I'm looking at the overall markets. Okay, I'm looking at this the entire markets itself. Okay, Dow is actually up. Okay, it was actually mostly green. Okay, you can see all the Nasdaq Composite, NYSE, okay, S&P large caps. Okay, all of them were actually up. Okay, and this is actually pretty good. But I do know a lot of people, right? Right now the portfolios are still red or still bleeding from last few days. Again, why is that so? And this is because, okay, most probably your funds are all sectored in a sector which is bleeding out, which is still bleeding out, even when the entire market is kind of recovering. So that's why, you must always have this kind of self-control, when you are, you must understand which kind of market phase you are in. Right now, we're transitioning from the euphoric phase, okay, all the way to the stagnant phase or the range phase, where there's a lot of panicking, or a lot of people are a little bit more scared, okay, and there's a lot of rotations in, out, this is actually the kind of the normal market, okay. This is what a normal market looks like, okay. And euphoric market doesn't last forever, okay, and we must always be very, very careful of that. So if I made mistakes in the past, it's okay, okay. We learn from our mistakes, and right now it's time to be open to learning and learn the new things so that you become a better trader and better investor. So again, you can see that the entire market is roughly kind of green. Everybody is recovering up to all-time highs. Okay, Dow is almost up to all-time highs. Okay, Nasdaq still a little bit more shaky. Okay, is still under the moving averages. Okay, technology has taken a great hit, and you can see that although it's been recovering a little bit, but most of losing its gain since early February and even up to last year's December. So again, if you bought in broadly, right, since December, okay, you didn't buy earlier than that, you'll be around break even or even at a loss right now. So major indices, okay, all green as well, everything all green. So we want to look at the sector SPDRs, okay, which is sector place, okay, where the funds are actually moving to and fro from each sector. So these are the main sectors that we can actually play: the XLY, XLP, XLE, XLF. So the entire market is split into all these sectors itself, okay, and it's either consumer discretionary, consumer staples, financial, healthcare, industrial, materials, technology, utilities, real estate. And most of them are actually up, except for communications, which are severely beaten down, okay, for the last few days. Okay, last few days, these companies have been disseminated, okay, I mean disseminated, totally destroyed. So they are right now recovering all the way to the lows over here. Okay, let me just zoom in for you guys so that you can see a little bit more clearer. Okay, right here, right? Okay, right here you can see that XLY, okay, has been down as well. XLC all the way down towards the moving average. Okay, you want to look for recovery or a certain bounce above this moving average that validates it, right? Like somewhere around here. You can see that it kind of bounces below and breaks above it, right? And this is somewhere where we want to enter potentially enter. But right now, it's still in a falling knife formation. That means it's still going straight down. We do not want to buy in yet because that's actually a danger. Okay, it's dangerous, okay, if to catch a falling knife. So again, you want to look for some kind of recovery or a bounce before playing XLC. Okay, many other sectors like real estate, right? Okay, at all-time highs. Okay, a lot of the sector funds have already flowed into these sectors. Okay, meanwhile, if you're in a lot of technology companies, right, which is all the hype that a lot of the new investors are in, right? Okay, they're not getting any of these gains because while the old school kind of stocks are actually destroying the market right now, is pretty awesome. Okay, real estate up to all-time highs. Okay, utilities. Okay, not all to all-time highs, but again up to a certain resistance level all the way up here. Technology. Okay, these are the ones that keeps getting rejected. Okay, it's in a falling wedge kind of position. Okay, it might consolidate a little bit more, might break down further. Okay, as you can see over here in my other tab over here. Okay, I'm using iShares US Technology as a gauge. Okay, you can use the Nasdaq, you can use the other indexes. Doesn't really matter. Just to give you an overall nicer gauge because their graphs are going to look roughly the same. And what can we see right here? We can see actually, right, there is a nice little, okay, it's actually falling down. Okay, it's actually falling down over here. Okay, it is good. Okay, that is respecting this kind of moving average, right? So luckily, right, it's still respecting this 100 moving average. But again, it's falling closer and closer, and I foresee, right, it's gonna hit a breaking point. So it's gonna be very choppy, up down all the way, following this moving average. If it breaks down below, then I think we're gonna have a little bit of a problem here. Okay, there's a lot to fall if it manages to break, but in my opinion, I feel it's unlikely because the overall markets is taking a breather right now. Okay, it's going to be a lot of fear, FUDs, a lot of fear, doubt, uncertainty until a lot of big funds start setting in, because a lot of I'm pretty sure, I bet you a lot of big funds, right, have been taking profits around the top here. Okay, and they have historically known as to take profits, right, by the end of the third quarter, which is March. Okay, and that's why I warned, right, a lot of people, not a popular video to do, but I want a lot of people to take some profits at the top here, okay, just in case it recovers or it tanks. Okay, so you can go check out those videos that I do in my tutorials that I teach you guys how to identify these kind of tops to prepare for a potential pullback. Okay, so not to be 100% invested, so they have money right now to buy the dips. So okay, it's going to consolidate a little bit more. Okay, and I see that it's going to probably break out soon, but for now, it's going to be super choppy for the technology indices as well. So XLB, okay, materials-wise, all-time highs as well. See the candles all the way to the max. Industrials all the way to the all-time highs. Okay, XLV, okay, healthcare. I won't say it's all-time highs, but however, it's reaching all the way there from all-time highs in 6 months, almost there. Financials, okay, not all-time highs, have a little bit more to run. So I'll say financials have a little bit of, you have potential right there in the financials. Energy, right? Energy is quite interesting play. Energy closed above this moving average over here. Potentially, you could play energy as well. I think energy has a pretty good potential to play as well. And last few ones, consumer staples, okay, way above, okay, it's very high. A lot of funds have been pouring into consumer staples. And what's consumer staples? Consumer staples means, consumer goods that are not really cyclical in nature, or they are goods that we use all the time. Okay, like food. Okay, we don't really not eat food when it's October or something, right? So consumer discretionary are more for like maybe cars or something. Like certain periods, certain quarters, they are doing more better than the others. Maybe due to some other factors, but it's like luxury goods or leisure goods that we are not really essential for human life per se. Okay, so consumer staples up maximum. Okay, consumer discretionary have more run to go, and consumer discretionary, is one of my bigger play right here. I can feel that consumer discretionary has still much more to go to the support resistance level up here from 165 all the way to 170. A lot of room to go. So let's deep dive into the sector which I think has the most potential. So most potential wise, I can see the energy sector, financials. If you want to play a little bit, okay, at all. For me myself, I feel that the biggest potential, right, is in the consumer discretionary sector. So consumer discretionary, right, I can use this ETF or the SBDI retail ETF XRT, right, and I zoomed into the smaller aspect of the entire consumer discretionary, which is actually retail. And you can see from this ETF right here, right, you can see that it is following a nice little pattern over here. Again, I love to play this kind of trending plays, okay, even when the market is super choppy. Okay, I like to play this kind of trending plays, and especially trending plays that have already retraced quite a bit and got rejected and has a confirmation. So what do I mean by that? Let me just draw it up for you, okay? doodle wise right here, okay, so you can see that what I like to see is respecting this the first point, respecting the moving averages, okay, is up in the trend. Second, okay, I like to see something called the, a pullback, a strong pullback. So a pullback back to an area of value, which is here, which is the moving average. So first is an area of value. Second, I can see the pullback already happening. And third, right, let me clear my drawings. Okay, you can see that there is actually a reversal. That means there is actually a bounce off the moving averages. That means it is actually consolidating or actually respecting this moving average right here. So if you want to take a look at closer, and analyze what's actually happened, right? I like to use the 1 hour time frame. So from the 1 day time frame, I click over to the 1 hour time frame. Okay, this is Yahoo Finance. Many of you could actually use this as well. And all the way here, right? You can see that 1 hour time frame. Okay, deep sell off all the way down here, but immediately a V-shaped recovery all the way back here. Then what's interesting right here, right, is I love to see when there's selling pressure in, but the sellers have very difficulty, pushing the prices down. So you can see from here, right, there is a bullish momentum upwards. Okay, so again, normally you can see like a company, right, it goes up, down, up, down, up, down, up, down like this, right, something like that. Okay, but what I like to see is a bull run, okay, retrace, breathe in, breathe out, right, so it's a breather, go up, but the next pullback is very weak. Oh, that means there's not a lot of sellers trying to push it down. A lot of buyers are buying up this kind of share. So this is a prime spot for it to explode up to the further upside. Okay, I illustrated this many times in my weekly video. So again, if this concept is new to you, okay, take some time to digest it as well. So what can I see here? Okay, bullish momentum up to the upside. But unlike here, right, you can see this strong selling pressure here, right? This area, very weak selling pressure, very weak selling pressure. You can see that there's actually a bottom over here and it closed above what? The 20 moving average. And right now, okay, it is prime over here, right, to make the next move higher. So that's why I love what I like about this charts on the 1 hour time frame itself. You can see that, okay, once it breaks past this level, okay, there's a decent amount of upside to be had, okay, all the way here to its all-time highs. Okay, quite a decent, upside. Okay, if you want to put a stop loss, you can even put a stop loss below here. Okay, so again, swing trade wise, right, if you want to swing trade a sector ETF, right, a sector, right, you could as well. Okay, you could swing trade an ETF, no problem. Okay, and actually for people who I know who are very conservative, right, or even some of the bigger fund managers, sometimes they even swing trade or they swing, right, this kind of smaller ETFs, but they swing an ETF as a whole because it is more reliable. And honestly, you do not have to have a lot of expertise into analyzing all the specific stock because for those specific stocks, right, some kind of bad catalyst for the specific company itself could actually tank the company, or it could be a positive catalyst and explode the price upwards. So again, smaller individual stocks are definitely much more volatile, while the ETFs are much more, conservative per se. So again, you want to swing trade ETF, can be done as well. So again, you can see, right, very bullish ahead for the retail ETF. So on this coming week's top 3 swing trade stocks video, right, I actually am going to dive into companies, right, that are in the retail sector. Okay, so look forward to that. Okay, subscribe to my channel, to see that video coming out. Okay, you can always watch the video when you're free. Okay, sometimes these videos are pretty long, but I like to give you as much value as I can as fast as I can. Okay, sometimes I speak very fast. It's okay. If you don't think I'm fast enough, okay, you can put 1.5 speed. No worries about that. So why do okay, now I'm going to explain why I like this kind of place where you can rebound to the all-time highs. Okay, take a look at steel, for example. Okay, steel ETF, okay, vector steel ETF. Okay, monster run yesterday. Okay, you can see that although like some people who are screaming like, oh my god, okay, my portfolio is still getting hit, is in a bear territory right now. Okay, it's not in a bear territory right now. If you look at the overall market indices, right, most of the sectors are at all-time highs. Okay, only specific sectors like technology and maybe healthcare are getting hit a little bit more. So if your portfolio is still being hit, probably you're over-diversified or over-exposed to the technology sector. So you can see that for other sectors, right, there's so much opportunities elsewhere. Okay, a lot of opportunities elsewhere. So you can see steel, right? Okay, again, does this look very familiar? Does this look very familiar for you? Okay, again, respecting certain moving averages. Okay, selling pressure up. Okay, you can see quite clearly, right? Selling pressure all the way down. Okay, huge selling pressure. Then after that, there is a green candle validating this kind of support area. Okay, again, this moving averages is a dynamic support resistance in a sense. So there's a dynamic support around here using the moving averages. So again, a close up here, next day popped up massive. For an ETF, it is 5% up for 1 day. And if an ETF, okay, is up 5%, that means most of its stocks, right, are up way more than that, okay? Because individual companies, probably there's a few companies that are not doing so well, that are dragging down the overall index, right? But there are some companies definitely up 10, 11%. So again, you can swing trade in this kind of environment. So that's it for today's, market summary, okay? I hope you guys enjoyed this sector analysis that I do from weekly to weekly. I do this kind of analysis on my own, and I wish to share it a little bit more with all of you, for all of you who wish to do, like to do your due diligence as such. And wrapping up, okay, so for the steel ETF, right, let me ask a quick question. Would you want to buy in right now? The answer is 3, 2, 1, no, okay, because it's at all-time highs, doesn't make sense anymore, okay? So steel ETF, I'm showing you just to, illustrate, my point of the confirmation, and after that, there might be a huge run upwards. So catch the move first. And again, a lot of the overall markets, okay, second, overall markets are still up green, okay, we're not anywhere in the bear territory yet, just a rotation from different sectors away from different sectors, okay? When technology is coming back, then I'll alert you in the next video. And lastly, the sector that I feel that has one of the most potential is actually the retail sector, which is the retail XRT sector. Any retail companies, right, do stand a chance, to rally up along with the entire market the next coming week, unless, a bad catalyst comes out for the entire market, right? The entire market just dies. But judging by what I know so far, okay, this is the prime sector to move forward. And two other sectors that if you want to play, you might want to play might be energy, which costs bound for, a huge, after the huge drawdown, there's a little bit of confirmation above. You might want to play energy, or you might want to play a bit of financials. But my highest conviction right now is actually the retail ETF. So before I end the video, I just hope to give encouragement to some of the newer swing traders right here, or even my old swing traders that have been following me for a long time, okay? Gone were the days where everybody is a genius in the markets, right? Because everybody is just making tons and tons and tons of money, right? Just by randomly putting money into any kind of companies, right? But when the markets right now is shifting from one dimension to the next, that's where, the people who are not confident, people who are not experienced enough will get shaken out, and some of them will be like, oh my god, it's a scam, or I'm never going to touch the markets again, and it's so difficult to swing trade, I'll just stick to long-term investing. Okay, long-term investing is good as well, and I am, again, 80% of my portfolio has been in the long-term investments, and I've been doubling down a lot of my favorite plays, okay, from way back, okay, like some of my favorite top long-term plays like Teladoc, okay, I've been buying so heavily, okay, just bought a couple 50, 60 shares of Teladoc, okay, really, really loving that company, okay, been doubling down a lot, okay, your high conviction plays, double down, okay, for me, if you want me to make a video of my long-term investment stocks video, drop a comment in the sections below. And encouragement, okay, do not give up, okay, I feel that, I know that, this kind of short-term swings up and down, right, can be quite frustrating at times, and I do experience it as well, because I do get stopped out of quite a few of my trades as well. But however, if you're consistent, like anything in life, right, you're consistent, you're putting in the constant effort, okay, there will be times where you're losing, okay, but there will be times where you're winning, okay. So again, when you're winning, okay, good for you. But when you're losing, and you kind of stop right there, right, then when the market shifts over to the next phase or whatever, right, then you kind of stopped your profits there, or you could be winning further on, but because of a few series of losses, right, then you give up. Then that's not the way to go. Okay, I feel that I want to give you guys some encouragement, and you could still swing trade in this kind of environment. I wish you all the best, good luck, good trading this week, and I shall see you again in the next video. Stock stay out.